Before we begin, make sure to like this video and subscribe to the channel for more deep dive investment analyses, stock forecasts, and breakdowns of market movers. Now, let's take a closer look at Lucid Group and what's been driving its stock. Lucid Group Inc., trading under the ticker LCID, is a luxury electric vehicle manufacturer headquartered in Newark, California. The company designs and builds premium electric vehicles with a strong emphasis on energy efficiency, long driving range, and luxurious interiors. It operates a manufacturing facility in Casa Grande, Arizona, and receives significant financial backing from the Saudi Public Investment Fund. Lucid aims to carve a distinct position in the EV space by focusing on high-end consumers who are willing to pay for performance and luxury, positioning itself in contrast to mass-market EV producers. In the second quarter of 2025, Lucid produced approximately 3,863 vehicles and delivered around 3,309 vehicles. For the year to date, this brings total production to 6,075 units and deliveries to 6,418. Despite challenges, management reaffirmed its production target of 20,000 units for the full year. However, actual deliveries fell short of investor expectations due to production ramp inefficiencies and supply chain constraints, signaling ongoing issues with scaling operations. Lucid is expected to report its second quarter earnings in early August 2025. Current analyst consensus forecasts revenue of approximately $288 million United States dollars, with a net loss per share of negative $0.22. For the full year of 2024, Lucid reported approximately $807.8 million in revenue, which marked an increase of around 36% year over year. However, the company also posted a substantial net loss of roughly $3.06 billion, translating to a loss per share of negative $1.25. Despite the steep losses, Lucid ended 2024 with roughly $6.13 billion in cash and equivalents, which decreased to about $5.76 billion by the end of the first quarter of 2025, indicating a healthy but diminishing liquidity position. In February 2025, Lucid's co-founder and chief executive officer Peter Rawlinson stepped down from his leadership position and transitioned into an advisory role. Chief Operating Officer Mark Winterhoff was named interim CEO. This leadership change was generally welcomed by the market, as it suggested a renewed focus on operational execution and potentially more efficient production processes. Lucid continues to benefit from the support of the Saudi Public Investment Fund, which owns more than 58% of the company and has historically participated in follow-on equity and debt financings to provide capital support as needed. This backing provides Lucid with an important cushion against its high burn rate as it ramps up vehicle production and expands its business operations. Lucid's current product lineup is anchored by the Lucid Air luxury sedan and the Gravity SUV. The Gravity SUV entered production in December 2024 and has already generated strong initial demand. More than 75% of Gravity buyers are new to the Lucid brand, a positive indicator for customer acquisition and market penetration. Early feedback has been favorable, particularly regarding the vehicle's range, luxury, and design. The Gravity SUV is central to Lucid's growth strategy and is expected to significantly boost overall delivery volumes once production stabilizes. Lucid is also exploring monetization opportunities for its EV platform through licensing arrangements, especially in the Asia-Pacific region. Although these opportunities are still in development, they could eventually provide high-margin, recurring revenue streams independent of vehicle production. For 2025, Lucid expects capital expenditures of around $1.5 billion. These investments are directed toward expanding the Casa Grande production facility, scaling Gravity production, and supporting potential technology licensing partnerships. Lucid's net cash burn over the past 9 months was approximately 80 million Canadian dollars, which is roughly equivalent to the same amount in United States dollars. Cash outflows were largely driven by research and development and selling, general, and administrative expenses. Total spending during the fiscal year was close to 100 million Canadian dollars. As of June 30, 2025, Lucid maintained a net cash position of approximately 135 million Canadian dollars, after adjusting for prepaid expenses. The company also has access to an at-the-market equity program that allows it to raise up to 100 million United States dollars as needed, offering additional financial flexibility. Lucid is not yet profitable, and valuation remains largely speculative, driven by expectations of future scale and operational efficiency. Most 12-month price targets for LCID shares currently sit near $3 per share. This implies minimal upside from recent trading levels, which hover around $2.90. These targets reflect widespread investor caution due to persistent losses, capital intensity, and the challenges of scaling production. However, bullish scenarios envision share prices rising to between $6 and $12. If Lucid executes well on Gravity SUV deliveries, signs material licensing agreements, and benefits from a broader market shift toward high-end electric vehicles. Conversely, downside risk is significant if production targets are missed, cost control measures falter, or macroeconomic conditions weaken demand. In the luxury electric vehicle segment, Lucid faces stiff competition from several major players. Tesla's Model S and Model X, Porsche's Taycan, Rivian's R1S, and Mercedes-Benz's EQS are among the company's primary competitors. Lucid differentiates itself with its advanced battery technology, long-range capabilities, and ultra-luxurious vehicle design. The Lucid Air currently offers over 500 miles of range on a single charge, a benchmark that rivals struggle to meet. While this positions Lucid favorably in terms of technology, it remains disadvantaged in terms of production volume, distribution scale, and brand familiarity when compared to established automotive and EV manufacturers. The stock has experienced significant volatility, trading in a range between $1.80 and $3.60 over the past year. Recent upward price movements have been associated with positive updates on Gravity production and the leadership transition. Key support levels currently lie in the $1.80 to $2.50 range, while resistance is observed near $3.30. If Lucid delivers positive surprises in upcoming earnings reports and hits its production targets, a technical breakout above $3.50 is plausible. However, if execution falters or guidance is lowered, a retest of the lower support range is likely. Investors should be mindful of several key risks associated with Lucid's business model. These include ongoing negative free cash flow, high fixed costs, reliance on external capital, execution risk associated with the Gravity SUV, and strong competitive pressure from larger and better funded rivals. Any further delays in scaling operations, disruptions in the supply chain, or internal management missteps could significantly affect the company's outlook. On the other hand, important potential catalysts include successful Gravity ramp-up, higher than expected deliveries, strategic licensing partnerships, and improvements in gross margins. From an investment perspective, Lucid appeals primarily to speculative investors who are willing to absorb high volatility in exchange for long-term growth potential. For such investors, accumulating shares in the range of $2.80 to $3 may present an asymmetric opportunity if the company successfully delivers on its growth initiatives. More conservative investors may prefer to wait for signs of sustainable delivery volume above 10,000 units and progress toward positive operating cash flow before considering a position. Risk-averse traders should consider a stop-loss approach near $1.80, which represents a key technical support level and a possible inflection point for investor sentiment. Lucid Group is attempting to establish itself as a premier name in the luxury electric vehicle space. While it benefits from proprietary battery technology, strong financial backing, and an appealing vehicle lineup, the company remains deeply unprofitable and faces considerable execution and funding risks. The successful launch and scaling of the Gravity SUV, progress on licensing initiatives, and effective cost management will be critical for validating the company's long-term valuation thesis. Investors must carefully balance the company's growth potential with its current financial challenges when evaluating LCID as a speculative investment opportunity.